Welcome to Market Matters. I'm Charlotte Chong, joined by Nadia Hassan. Nadia, it's the last trading week of the year, and we will continue to see thin volume for the entire week.
Massively scary, isn't it? Have you done anything this year?
I have.
You feel you've accomplished
something?
Yeah, that's always a good thing. Have you feel that you've accomplished something this year? Yes, you know, we always go towards the end of the year and you feel whether or not have I done something with my life.
Some of your things in the list.
I don't know if I've done something with my life. But anyways, regardless of that, how has the market been doing after like our long weekend?
Yeah, KLCI actually closed 7.22 points or 0.43% higher today at 1,670.73 points. Highest since December 4th. Total volume was at about 1.91 billion ringgit, just slightly shy away from 2 billion volume that we usually see in a market day, worth about 1.72 billion ringgit. Top gainers were PETDAC, Panami and LPI. Top losers were Top Glove, PIA and Kajang. Actually, top gainers, we saw some of the oil and gas counters, which we are going to talk about it in companies in the news later.
Yeah, so in a bit later, but I like I said, for markets, right, it is the last 4 trading days. Maybe the reason why it's ticked up is because a lot of people are battening down the hatches. They're putting positions for last year. I think what they're buying is really telling. When you look at the fact that everybody's buying oil and gas because it's had a terrible year, I think that's why you see this kind of buying. And like you said, we'll talk more about it later. But I think if you want to know how the people feel in the market, it's really good to see what they're buying.
I think some of the fund managers also, taking out their pocket money, putting in their position, probably increasing their portfolio at the end of the year.
So yeah, original markets also were dipped today because I think people were directionless and everybody was still drunk off the eggnog and didn't really want to trade. It was very light year-end trade. Only Japan didn't close their markets on Friday. They had some really bad consumer data. I think that's why if you look at the Nikkei, it literally looks a little bit listless. I mean, how Shanghai did?
Actually, talking about regional markets, most of the Asian stocks are, like what you said, directionless, but Southeast Asian stocks were mostly up today. Shanghai down 2.59%. Asian market, but Nikkei bucked the trend up 0.56%. That's because Asian markets, they are weighing on lingering concern about the health of China's market. Global Outlook in 2016.
Interesting.
And these chief strategists in Manila actually say the volatility will continue in 2016, first half of 2016, and that's because we don't see any stabilization in the global market.
So yeah, moving on to our hot stock of the day, what do we have today?
Hot stock, we have Apollo Food Holdings Bhd. We have been talking about this stock for the past several months because it was picked as stock of the day by the Edge Research several times this year. It also pegged as negative momentum by the Edge Research today. Shares was up 4.8% to 5 ringgit 89 cents today. Year to date, shares has gained about 34%.
Yeah, so I think you know that credit card companies know a lot about you, right? So because you are who you buy. So I think this is a great indication of you are who you buy. Like you said, I think investors are doing year-end kind of shopping, yield accretive stocks. Hopefully Santa gave them more than coal this year. So all of that is going to why you see people channeling into really old statesman companies like Apollo. Ajinomoto was last week where we saw stocks that didn't move, right? They actually bumped up because people were just looking for safe harbor. And the thing is, I suppose when you look at the algorithm, maybe the algorithm thinks that this has just gone too far. But if you look at the stuff for them, it's quite good. Year-to-date prices of sugar, flour, that's the big thing for them, declined about 10.8%, 17.2%.
Yeah, when you look at the valuation, their valuation is actually quite low at 15.37 times PE. When you compare it with its peer, Oriental Food Industry has a PE of 17.04 times. And Hassan Industry actually 19.57 times. So probably it's actually quite affordable if you compare to its peer, and that's why investors are buying it today.
Yeah, but maybe the negative momentum that we say is, do you think maybe it's because it's gone up too fast in a trend that is, that's the thing, it's a trend that's not normally seen in Apollo. That's what the algorithm picks
probably
up, right?
It has hit the peak.
Yeah, exactly.
That's what they meant.
I don't know. I think products are exported to more than 50 countries. It'll be good for them because it buffers against that whole bad ringgit, good USD kind of story. So yeah, Apollo, I don't know how much more trading we'll get out of this given it's already today's all in 3 more days. We'll see how it goes.
The company actually has a net cash of 100 million ringgit.
Ooh.
And the Edge Research actually say in an earlier report, they say they will be able to sustain its ability to pay more dividends. To take it all home, This stock also packed as negative momentum by the Edge Research today. Year-to-date shares up 34%, 35.9% to be exact, 33.59% to be exact. Valuation at 15.37 times, lower than its peers. Let's move on to stocks with momentum. Today we have Kenneth Kajang Rubber Public Limited Company. It's a very long name.
Yes, most people just, if you're a friend with it, you call it Ken.
Ken.
The
stock actually down 0.71% today to 69.5 cents. It also operates 2 tourist resorts in Perhentian Island. It's actually called Perhentian Island Resort in Terengganu.
So the thing is, right, usually we do these little things saying what Kenneth does, but it's there in the title. That's what's involved in. That's why you mentioned the 2 tourist resorts in Perhentian. No, it's no stock was pegged with positive momentum today. This is negative momentum. The funny thing is, it's been loss-making since 2013. The decrease in the group's turnover was lower sales, right, for them. I mean, that will always hit you, right, when you see the lower sales. And, you know, they are, I don't know how they're going to turn around, because right now, you know, the consumer guys, not the consumer guys, the commodities guys, they are seeing a new renaissance, I think, for some of them.
This company actually came out with a report or article saying that they want to diversify in the property market, but they still will maintain their focus in the CPO markets. That's why they are scouting for more lands in Kajang and Bangi.
Well, at least they're not telling you they're going to go make doll houses. You know what I mean? Property is kind of a simple extension for if you do CPO. Look at something like Sime Darby, for example. The thing is, right, again, do you really want to go into that market? They have a lot of proceeds. You know, the decrease in oil palm production was because their palm trees are too old and too tall to harvest. Wouldn't you be better putting your money in that, in a bet that you already have?
Exactly.
Because let's not forget, CPO is not exactly doing the best as well.
So what happened was, earlier this year, they disposed a piece of land, Bangi land, to UEM Sunrise, and they got about 259.9 million ringgit. And they say they are going to utilize this amount of money to buy more lands. But I guess they are going to buy lands to plant more palm oil.
You'll have to convince me a bit more as we talk a little bit more about their earnings. As you can see from the chart, literally down 43.9% on the top line, 50 plus on the bottom. I think they'll have to have a major miracle Hail Mary for them to pull it out.
To wrap up, this company is actually pegged as negative momentum by the Edge Research. It has been loss-making since FY13, 2 years. And despite wanting to venture into property segment, the group is making an effort to scout for more palm oil tracts. The group said tourism and manufacturing sectors to at least break even for this financial year.